G'day everyone, welcome back to Pete's Investing. Today is March 6, 2023. This is the S&P500 update, and it did bounce off our last update. It did bounce off this key support area, and that also correlates with this ascending diagonal trend line. Now, the CCI 1500 is still well below its moving average of the 400, but if you're trading the hourly, you'll notice the CCI has broken through to the upside of the moving average, and that's also above the moving average on the CCI of the 4-hour chart. So if you're going to trade this, I would suggest waiting until a bit of a retrace happens from that high, if it comes back, and just wait for it. Just notice the CCI is a bit of a downturn at the moment, and so is the price chart. It may come down a bit further and possibly go as far as the 23 up till the 50% level. And as soon as that starts turning up again, that may be a good opportunity to go long. We'll keep an eye on that. But at the moment, trading the hourly is probably wise if the 4-hourly is broken to the upside. Avoid going short at the moment until we see a more substantive drop below its moving average on the 4-hour chart if you are potentially going short. Likewise on the hourly, if it does break below the moving average, make sure that's confirmed by the 4-hour chart breaking to the downside as well on a CCI. In terms of further advancements, it may go, as you can see here, between where that is a diagonal descending and ascending trend line. We're looking at it possibly going as high as that descending trend line possibly, and then coming and bouncing in the near term in the coming days in amongst that range as that descending trend and ascending trend lines converge. We may see it consolidating in there for some time. To understand how to properly trade using the average down process, reference the playlist at the end of the video or some links in the description below. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends. If the stock price goes against you, don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating, and if you are going short and you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.